Okay, for this video we want to look at the Form 1099 DIV for dividends and distributions, but specifically we want to focus on the non-dividend distribution component. So if you receive a 1099 DIV and box 3 is completed for non-dividend distributions, what is that exactly and how does it get reported on your return? So I have a sample 1099 DIV here, and it is together with a complete Form 1040 for our taxpayer. So our taxpayer here is John Q. Taxpayer. So we're going to go over his 1040 and where all this is reported. And then I do have one slide here covering some of the background on the 1099 DIV and what are these non-dividend distribution amounts. So when we think of dividends and the 1099 DIV form, for individual taxpayers, most of the time the amounts are just simply reported on Schedule B of your 1040, and then it's subject to tax, right? You have qualified and non-qualified portions, and so it's relatively straightforward, right? And so most cases, if we look at a 1099 DIV, most taxpayers will just have boxes 1A and 1B completed, right? That's generally what you would see. But in this case, John does have some non-dividend amounts, and so if we have things like non-dividend amounts, if we have federal taxes withheld, investment expenses, perhaps exempt interest dividends, things like that aren't going to be reported necessarily on Schedule B. They might find themselves reported elsewhere on the return. So what is the non-dividend distribution amount? Non-dividend distributions are distributions of property to shareholders that are not treated as a taxable dividend. Okay, so the shareholder is getting some cash or other property, but the amount that is characterized as non-dividend is not taxable. And it's not taxable because it represents an amount that exceeds the corporation's E&P. So when corporations distribute dividends to the shareholders, dividends from accumulated E&P are taxable to the recipient, but if the corporation distributes more money than it has E&P, then that excess amount is not a dividend because it didn't have the earnings. And so that excess amount is what is treated as the non-dividend distribution, right? So if we look at our references here for the tax code, in Section 301C1, it talks about how dividends from E&P are included in the gross income of the recipient, right? So if we have a dividend distribution from a corporation to a recipient, it's included in income of the recipient, right? We have that ordinary income amount. Ordinary dividend amount. But under 301C2, if we have a portion of a distribution that is not a dividend, right, so that's that non-dividend distribution, then it is simply applied against and it reduces your adjusted basis in the stock. So the recipient that gets this extra money, that's a non-dividend distribution, it reduces their stock basis or their cost basis in the shares. And so that's what we're going to see here with John's fact pattern. So let's have a look at the fact pattern here. So John Q. Taxpayer buys $15,000 worth of stock in Not Real Corporation, Inc. Okay. Now he makes that purchase on February 1st, 2022. At the end of June, the corporation distributed cash dividends to its shareholders. So as part of the total distribution, John received $600 in cash as a shareholder in the company. Now, John actually gets $600, but then the question is, how is that characterized? Is it all dividend? Is it a portion of non-dividend? Does it represent something else, maybe a capital gain distribution? So the corporation tells John that, okay, of the $600 that we distributed out to you, $200 is a dividend distribution from corporate E&P, and then the remaining $400 is a non-dividend distribution. Really important information for John to have, right? Because now this completely changes the tax profile of his return now that he has this extra information. So then on September 5th, John sells all of his stock for $15,700. So he's seeing, okay, $15,700, that's $700 more than my original purchase price. So I've got a $700 gain. Great. Now, how does all this actually get reported on the return? Well, the first piece, Schedule B, is the $200 of taxable dividends. So we recall on our 1099 DIV here, we have $200 of ordinary dividend. All of it is qualified in this case for John. So when he's looking at his Schedule B, Part 2, he can report the Not Real Corporation, Inc. dividend distribution of $200. All right, so that's that easy piece there. Now, what does he do with the non-dividend distribution? Well, the $400 non-dividend distribution isn't reported directly anywhere on the tax return, right? So there's no schedule or form where you would really input this number. Now, if you're doing this with tax preparation software, they're always going to ask you to enter this field, right? So enter the amount of non-dividend distributions. But what you'll notice is this number never actually gets entered anywhere on the tax return. But it doesn't mean you can ignore it, right? Because again, non-dividend distribution is a return of principal. So John has to reduce his stock basis by the $400 of non-dividend distribution. So remember, his cost basis was $15,000. He lowers that by $400, which is a non-dividend distribution. So that is his new adjusted cost basis. So when he looks at his 8949 and Schedule D, he reports the stock sale with the gross proceeds. So $15,700 in the sale price. Cost basis of $14,600, so that's the adjusted cost basis, right? $15K minus $400. So when we look at his tax return here, let me jump over to 8949. We've got the shares of his corporation, the date acquired, the date sold. There's his proceeds, right? What he sold it for, $15,700. But notice the cost basis we're reporting is not the original 15. It is the 15 minus the return of principal amount, so $14,600. So his true adjusted taxable gain is $1,100. It's not the $700 that he originally thought it was. So the takeaway from here is, non-dividend distributions, as you receive them throughout the year, good news is, they're not taxable, right? You get that cash, it's not taxable to you. But again, you can't ignore it, right? It is a return of principal, so it reduces your cost basis. Now, many taxpayers receive these over a number of years. They hold the stock for years, right? And so as they receive non-dividend distributions, it's slowly chipping away and lowering their stock basis. But if they think they're going to hold this for almost forever or not sell it for 10 years or whatever it might be, then they really don't care that their stock basis is being lowered that much, right? Because it's only really an issue when you actually go to sell the shares. So because John bought and sold all of this within the same year, it's much more noticeable to him that he had this reduction in his cost basis. All right, so that covers it for this video. I hope that was helpful and provided some guidance on how these non-dividend distributions work. As always, if you have a question about non-dividend distributions or other 1099 DIV questions, please feel free to leave me a comment below. I try to get to as many of those as I can. And of course, I always look forward to seeing you again on the next video. All right, thanks. Take care.